permanent. Maybe one day it doesn't become durable. All the evidence so far points to it being that way.
Why are you asking me? You know far more about it than I do.
But I'm curious as to your views on it, because I know you have owned gold. I suspect you probably still own some gold, but I'm curious as to how you think about it within the framework that we've been discussing today. Because it's not a company, it's not...
Cole, he's my miracle child.
Man whose eye you can look into.
It has no PE.
Has no PE? It has no PE.
It has a P, but not an E.
Right, right.
And the fact is that the P is in money, which itself has no, we don't know what it's worth.
Yeah.
Well, I have had a fairly long history with gold, starting in 1998. And I've owned gold bullion for many years. I think at one time I saw it as being incredibly mispriced. And I saw it as an anomaly, thinking that somehow the market has, occasionally the market misprices certain assets.
So what was it that made you think it was mispriced?
I had a curiosity about gold for the right reasons. For a long time, I used to be an owner in Franco, Nevada since 1996 or thereabouts. But I've never owned bullion, and Franco was in the business of royalties, and it was an extraordinary business managed by incredibly good people. But in 2001, I had a fortune to be a guest of Goldfields in Johannesburg, and as part of this thing, they gave us a tour of several facilities, and I don't really know what mine we went to, but I know at some point the man looked at us and he says, "Do you see this field over there? There are 10,000 people that work 2.5 miles down."
Right.
And I stopped for a moment to consider the logistics of providing air, food, water, or whatever living conditions for so many people down there. Immediately I think of the capital that it takes to do that. This is not a small matter. And then they took us in this shaft, this elevator shaft that moves actually quite fast. And they took us all the way to the bottom of this pit, and they gave us a tour of the rock faces and all that. And I remember I had this unbelievable feeling as I was coming up the elevator some hour later, that either the price of gold was mispriced, it was selling at the time at $250 somewhere, give or take $10, or all of this capital that had been sunk here had to be written off completely and forgotten. And it was either, I thought of the idea that it was either one or the other. There could not have been any rational solution in the middle.
Right. It's either worth nothing or a lot more than 250.
That's correct.
Yeah.
And what I did is that I felt compelled that this was the time to buy it. And I did not buy gold, I bought shares in Goldfields.
Right.
At the time they were selling for $2 or less. But a year or so later, after the initial rebound had taken place and Goldfields were selling at 18 or 19, I decided that I would own gold, the physical metal, for different reasons. I would own it, so I sold equities and I bought shares in GLD, which I subsequently sold because shares in GLD for me did not represent ownership in gold. They represented a security that perhaps reflected its price. I wanted to own the real thing. Same way a farmer down here doesn't own cattle futures. He owns the real cattle.
Yes, cattle, yeah. Right.
So over the years, the component in gold in portfolio, of course, the price went up from 250 to whatever, 1600, etc., back down to 1200. Today, it represents gold about 35% of our capital, physical metal.
Yeah.
But I should tell you, I mean, I don't own it with the idea that the price will go up. So don't ask me where the price is going or when or when or
I would
why.
never do that because you're right. It's unimportant.
I own it because had I not owned gold today, I would own treasury bills. I would own short-term commercial paper. I would own cash deposits and other such things to provide me liquidity.
Yeah.
Because I think that roughly about 60% of our capital is permanently invested. Roughly about 40, of which 35% is gold, is in liquid. I want it liquid so I can exchange it for participations like the one we have in the future at some point. And I think any good investment operation, particularly if it involves irreplaceable capital, must have embedded in it a source of continuity and substance and reserves. So, years ago, I would not hesitate to buy treasury bills, commercial paper, short-term bonds, time deposits. But I have come to believe that virtually all of these things I've just mentioned, they're actually debt.
Right.
When you deposit money in the bank doesn't actually hold it in a vault there. It's a liability of the bank. When you deposit, when you buy a treasury bill, you're buying somebody's debt. You call it an asset. When you're buying a bond, it's actually a debt. You call it an asset because it's got a CUSIP number or an ISIN number. Right. So I decided that I want my liquidity not to be somebody else's liability. I want it to be an asset. So gold gives me what? Scarcity.
Yep.
It gives me permanence.
Yep.
And it gives me independence from the financial system.
Yep.
It gives me all those things.
All the things you're looking
at. These three things.
Well, look at it. Let's do a present day hypothetical. I mean, it is hypothetical, but still, let's give it a try. But if you decided today, what would make you exchange your gold for something today?
I mean, I hate to say this to you today because I don't want anyone to sort of quote me, but today the nominal price of gold is in fact cheaper than it was when I first bought it in 2001. Now, if you buy it for the sake of profiting from a price rise, there's really nothing wrong with this, and I'm sure there are many people in your organization who you've talked to who know far more about it than I do. My sentiment about gold is very simple. It's something that I understand.
Yeah.
Something that I hold in a vault that I can see. Something that I can be sold to anybody, anywhere in the world at a moment's notice. Something no one actually owes me.
Yeah.
It's not a claim on anything. It's not a promise for anything. And there's a sense of peace that I possess by having financial strength that even central banks don't do. We own 3 tons of gold, and at one time is more gold than virtually most central banks in the world own.
Right.
Canada owns nothing, I think, or
Right.
something.
I'm willing to bet a substantial size of my assets that you don't own any Bitcoin, nor will you ever own any Bitcoin.
Point is, I don't know what it is.
Right.
I don't know where it is. I don't know what it looks like. I mean, they have still pictures of gold coins
Gold coins,
with
yeah.
on it. And they talk about mining it. And so they've used all the elements of, superficial elements of that having some sort of tangible, I don't know what Bitcoin is. Where do we find it? Can I misplace it? Do I lose it? Where is it held? And so I don't want to own things I don't understand. I don't care if it's going up. It makes no difference.
Right. From everything we talked about, I knew gold must have had a place in Tony's portfolio, but even I was a little taken aback at just how large a part it played. Upon reflection, however, and given the exceedingly small universe of companies which meet his stringent investment criteria, it made more and more sense to me that gold would be the perfect place to keep his liquid assets. A world away from gold, Tony's search for long-term investable opportunities requires an understanding not just of an overall industry or even an individual business, but also of the various component parts that come together to create that which the world sees at face value. So I want to talk to you about something that is a common thread in some of the conversations we've had, and that's the idea of the structure of production. Because this is something that occurs time and time again, and I'm interested in it because today people think one step down the line. If an idea happens, they think, who's the beneficiary? And once you get a sense of this structure of production and some of the examples that you have of companies that you found that are 3, 4, 5, 6, 7 steps down the production line, just talk a little bit about that concept and how you use that to identify companies.
I don't think that we purposefully look for such a standing. It's just a natural outcome of perhaps valuing the idea of scarcity a bit more than others. For example, a lot of people could perhaps like to enjoy having a whiskey, but a lot of people do make whiskey. A lot of people make the glass and the bottle, but how many people make the machine that makes the bottle? Right. Only one. And you end up having a view that there's scarcity and oligopoly in certain areas that have come as a result of some events or some reasons that are economic positions that are impossible to compete with for a number of reasons. Mm-hmm. So to the extent that these economic agents are wise and they can use their position to do well, that idea of scarcity in technical expertise or position adds to the enduring value of a company. I would not want to participate in the securities of a company that does some commodity item, like even if it may have a label on it or some mm-hmm. kind of a brand, because the barriers to entry are fairly low in most cases, or the general acceptance of such product is subject to the seasonal whims of the public or the buyers. By the same token, I'm not interested in acquiring a stake in a company that provides aircraft transport or train transport or truck, because they have no operating leverage. They're subject to inputs and costs that are beyond their control. They're subject to government regulation, and they don't represent the substance that I want to have. Now, they may be fine for other people, but just not for me. On the other hand, we spoke earlier about an investment we have in EMS in Switzerland. Here's a company that produces polymers. A lot of people can probably do the same things they do. Nonetheless, here's a chemical company that has operating margins that are unheard of in the chemical industry. But only in the sense that they take these polymers, polyamides in this particular case, to create products that solve problems that no one has ever thought of. Among the many products, in fact, they make the little exciter that goes into every airbag in the world. We're not looking for this, for the place they are in the structure of production as much as we're looking for this uniqueness, this ability to have natural barriers to entry that are based on a number of factors that are difficult to compete with. That's just an advantage. It's not always permanent. You have to cultivate it and you have to adapt to it. Nothing is permanent.
Right, but the further up the structure you go, the more chance you have of identifying an input that is, for now, unique.
Yeah, but you don't want to manufacture a product or to be part of. I don't want an investment in a participation in a company that makes something of the nature of which is so large as a component of something, so as to be subject to the seasonal demand, or subject to external risks, either through government intervention or regulation or competition. I want an element of independence, and oftentimes, for example, this exciter I was telling you about, only as an example, is an infinitesimal part of an automobile.
Yeah.
Yet an automobile cannot do without that. Right?
Yes.
It's a matter. And we can talk about many other such examples. So you need to gauge and understand the strength of what you own within a competitive economy in which we operate.
But this exciter idea is an interesting one, because It's a component, a tiny component that costs a handful of Swiss francs, but it's in every single car that's made today.
Sure.
And as the number of airbags increases and
Sure.
safety standards increase, the number of these units required also increases. So, something like finding a company like that, which is up there hiding in plain sight. But people tend not to they think about, car sales, Ford, GM, Volvo, Saab, wherever. They don't think about component parts, certainly not down to that one tiny, tiny component. That's the extra work required if you really want to understand a process and find a point in that process that is defensible and profitable and will help a company make money for the long period.
Yeah.
Correct. So when you find a company like that, just kind of, if you can, walk us through the process from finding that idea. Okay, how do you then go from here's an idea, here's a potential investment. How do you turn that into an investment?
I'm not sure that there is a checklist that one would normally think it's there. You need first of all, you need to ask yourself that do I like this business?
Yeah.
You can't just merely say I'm making an investment because I'm going to make money with it. First of all, do I like this business? Do I understand it? Do I want to be in this business? Why? What is the history of this firm? What are the competitive advantages? What is the larger environment in which we operate? Both from the issue of demand, where does the demand for the product come from? Does it come as a result of government policy or subsidies or regulation, or does it come as a result of choice on the part of the consumers or the customers, etc.? What are the components that go into this business, and how are they regulated, and how are they what risks are they subject to in and of themselves? What is the market for these companies' products? So the supply of components, the market for these components. How honest are the revenues? How permanent are they? What are the factors that influence their, say, operating margins or unit growth? How have they deployed their earnings in the past years? How have they grown? I have never met a company that has grown from acquisitions, subject to just acquisitions. Acquisitions are when you look at something that depends on acquisitions or financial engineering, you're looking at an accident waiting to happen. Mm-hmm. What is the ownership structure of this company? Who owns it? How long have they owned it? What have they done with it? Who are the people involved? How long have they been here? And so the fact is that as you begin looking at it, at any one moment you come across something that says, no, I'm not interested. Something significant.
Yeah.
It's only at the very end when you say, here's something that is substantive, valuable, something enduring, something scarce, something extraordinary, something beautiful, that you ask yourself, well, what is it worth? We all know what something sells for, right? Particularly in listed securities, you can look it up and immediately see what it sells for. But what is it worth? How do you approach the idea of value in this particular case? What are the components that add to value? What risks are inherent in the business that you would want to take haircuts against? How do other people think it's worth? Under what circumstances over the period of time? Is it something that's neglected? Is it something that's followed by every mutual fund and ETF in the world? If it is, I'm not interested. Look, it's not a science.
No, absolutely not.
And I think it would be a mistake to suggest that you have a checklist and you go through and you...
Oh no, I'm not suggesting that. I'm interested in some of the inputs.
It's a subjective process that sometimes you come to a very quick conclusion as to the attractiveness of something. Sometimes it's sort of like you meet a girl, some people just know immediately. I've met someone who says, immediately when I saw this girl, I fell in love with it, I knew she was going to be my wife. That does happen. Other times you get to know someone, you get to grow with them, talk to them, take them to dinner, etc. And then you begin to appreciate the value that is in this person, the same thing with this. The last thing I do really as a person is look at the price and say, well, Oftentimes, of course, in the last 10 years, more often than not, things that I would like to own are priced at such a level where I think it's just not suitable for me to acquire, to invest at that price. Price is an important thing, but what others think about what the potential earnings are is not of consequence to me, because I know they are all. I've never met anyone who can predict this sort of things accurately,
Right.
consistently, so I don't rely on any of them. We have a wonderful team that does a lot of work answering some of the basic questions, but I ask myself 2 or 3 questions oftentimes. One is that if I own this whole company, would I want the same people to run it?
Yeah.
This is, I guess, very subjective. Another question I ask myself, would I want to own the entire thing? Is it something I would want in my collection of assets? If I wouldn't want the entire thing, why would I want to buy just a little bit so that I can? I ask myself, is this business likely to be around 20 years from now? And I know this is a difficult question, and I know that probably say to yourself, well, how would you know? Well, if it has been around for 200 years or 150 years, chances are it will be around for 20 years. But you generally know when you look at the decisions that are being made over a period of years. Looking at decisions, you understand the motivation of those who own this firm. And you understand whether or not they're sowing seeds for the next year or for the next 10 years. I used to own a stake many years ago at Safra's Bank in Luxembourg. Safra National Bank. You remember this bank?
Yeah.
And I think we owned it for 7 or 8 years, and the price never changed. It was 50, 51, 52, 49 for 7 years. The business was doing very well.
Yeah.
No one was following. Unbelievably, so the dividend yield at the time was 12%.
Right.
Current yield.
Yeah.
Anyway, I remember distinctly someone saying to me, why do you own this? The price is not going anywhere. I said, it's a great business. You know, Edmund Safra was a banker's banker. Well, he's one of my heroes.
Yeah.
And then one day, HSBC paid me $195 a share when he sold the bank. After 7, 8, 9 years,
Yeah.
I'm not sure how.
And you was paid 12% a year to hold that for 7 years.
And I was paid 12%. The point I'm trying to make is we make a lot of judgments by looking at the price of something on a daily or weekly basis without having a clue as to the seeds that are being sown today, good and bad, that are likely to bear fruit a year, 2 or 3 or 4 years down the road.
Do you start trying to find reasons not to do something? Or do you start, once you have an idea, do you start?
Sometimes, yeah. Sometimes something looks very nice.
Yeah.
And you say there has got to be something wrong here.
Right. So you seek out to find a reason not to buy something.
Or not to add something
Yeah,
to an
yeah.
existing holding, or you know. I'm a doubting Tom.
Right.
Thomas. Right.
Yeah. Doubting Thomas, yeah.
Now there comes a point in time, though. There are people that I know, people who run some investments in companies in which we have a participation, but I would trust completely. I mean completely. Because they've demonstrated faithfulness to their families, to their companies, to their shareholders over many, many years. And I would never second guess them. Never. There are others that I would second guess, but I will write a little letter maybe.
Mm-hmm.
A very nice little letter. But if there's a series of error or actions that I'm not sure are in the best interest of the company long term, I will quietly leave. That's the only thing I can do, being a minority shareholder.
Sure. But these relationships, I mean, you know, this comes back to time preference again, because you don't get to develop that kind of a relationship with management, that kind of trust in management, unless you are a stakeholder, unless you keep mentioning this.
I love this word,
participation.
stakeholder.
Yeah, but you mentioned this word. You know, you have participation in things. You have ownership in things. And these are different terms to the way most investors think of things. And it's funny. It's just words, but they convey a different sense of what these investments mean, both to you, to your holding company, and to your shareholders. And you don't get to develop that without holding these shares for a period of time. And people don't. People buy a share, and it's, you know, some families pass on shares in Exxon or IBM to the kids. But it's such a big company, everything you know is out there. No one really knows the CEO of IBM. But these companies you find, these small...
You remember years ago when we were younger, they called it the gambling business. Now they call it the gaming business.
Right.
This is not by accident. They want to infer to you that there's an element of fun in giving money to the house when all the odds are against it.
Right.
This is quite similar to, I guess, the typical investment process that most people do. But you don't have to participate.
No, you don't.
You don't have to go to the casino.
But so how do you go about generating ideas? Do they fall into your lap because of happenstance, something you say that will trigger a thought and you'll just go off and investigate that? Or when you're sitting down with this time thinking, whether you're up in the woods or whether you're out on a boat, how do you find an idea? How do you find a company? I know it's a very broad question, but people do it different ways. Some people say, I read the news and a story will happen and I'll follow it through to its logical conclusion, see your qui bono.
No, yeah, I've never had any investment ideas come through reading the news.
No, right.
Forget that. Generally, it will come from knowing other firms who are in the same business, in the same industry, or curiosity. You find a nice... I don't know, it comes from all kinds of sources. It's not important to be looking for opportunities. We don't do that. What is important is to acquire an understanding so you can recognize the opportunities when you see them.
Right.
You understand? Because if there is an opportunity, it comes across for everyone to see, but very few people perhaps recognize it. Right?
Yeah.
So the people who recognize it are prepared to recognize it. So what are the tools you need to recognize something that appears? Well, you need understanding of a business, understanding of a sector, understanding of a market need. You need perhaps to have a third, fourth sense of something. I have conversations with a lot of people, particularly email correspondence with people in, say, some industries that we have, some companies we have. We have a team in the office of younger than me who are eager, enthusiastic, and perhaps even more curious than I am. And so altogether, generally speaking, you will come across in the course of a year 50 or 60 situations that require that you take another look. And out of this 50 or 60, if you're very lucky, you'll find one that fits.
Right.
Yeah, but you have to invest a lot of time and effort. In the meantime, you learn something about the process.
Yeah.
So.
But is that time ever wasted?
No, it's not wasted at all. What happens is that if you spend 3, 4 to 5 days understanding how oil is extracted in, say, in Canada, and how it's refined, and how it goes here and there, and the cost components and the capital structures of companies, you acquire something. You may do nothing about it, but it's filed here. Mm-hmm. So next time the situation comes, you have tools with which to think. And I think that what's missing in our world is this ability to have tools with which to think about the economic value of a business endeavor rather than its financial value. It's easy to say this company sells for X number of dollars or euros or francs. What's difficult to say, what is this company worth and why? Right?
Yeah, absolutely.
Now, what has this? But there's been there. Part of the reason is there are also a lot of distortions. This private equity business has come in. Private equity is nothing other than regular equity that's leveraged.
Yeah.
And because of their ability to borrow unlimited sums to buy unlimited things and their ability to turn them over, they're able to pay prices in the marketplace for businesses that are perhaps higher than the owners think they're worth. But their business is to extract substance out of such companies and get rid of them. Their business is to make money from their security.
Sure.
But this has distorted the market, the market's ability to discover true value in terms of pricing. Price discovery is really distorted immensely on account of both monetary experimentation as well as the moral consequences of such policies among economic actors. So it is difficult, but you don't have to do a lot. You don't have to do many things. You don't have to have expertise in every possible area. You have to do whatever you do. You have to do it very well, though.
Well, let's
think about it. If you do it well, if you can say, if it were my own money, my own savings, would I do anything differently? And I can tell you, I wouldn't do anything differently at all.
So why is it that, to me, that seems like an extraordinary statement today? Why do I feel as though that's not...
I don't know. Ask yourself.
No. It seems as though...
To me, it's elementary.
I completely agree.
No.
I think it's the way it should be, but I don't hear that very often. I don't hear that as an ethos very often. I manage money as if it was my own savings. And what would I just don't hear that, because I think it's focused on returns, and returns are essentially a price.
Look, this is what people want. Grant.
Right.
The market provides, the market demands. People want to have, I heard somebody the other day, they don't make great movies anymore. Remember the great movies of the
Right.
50s, the 60s, the 70s? Why? That's what the people want. So in a capitalist system which we have, you have the freedom to produce the kind of product that people want to buy. So there's always a limited demand for something that is a bit more rare, or different. There's nothing wrong with it. I find it completely acceptable. You will never, it is very unlikely that you will find a very large demand for something that is not very popular.
Right. But it's self-evident, I guess, but it makes sense. I just find that this business was built on your kind of philosophy, this careful stewardship of savings. That was the foundation of the investment business. And yet today, I find you to be the outlier. I find your investment style to be the outlier. But to me, it harkens back to a different time, a time when everybody thought the way you did. And I just, it feels as though the industry has lost its way. It's lost, if not its soul, then perhaps its center. And
look, Grant, you may be right, but I see it from a different, I know a number of people who do what I do, more or less the same way, and perhaps a few variants, but their philosophy is the same. What I can tell you about all of them, you will not find them on Twitter or on
Right.
Facebook. No one will promote their shares or themselves. They're not on
Right.
television, and they will all make fun of me of the fact that I'm talking to you. I will get some phone calls about
I'm
this.
sure.
Yeah. But he who shall search will find, they say. It's in the Bible, I think.
yes,
If you want to find very good tasting tomatoes, it is unlikely you will find them in your local grocery store. If you want good quality fish, meat, cheese, it is unlikely you will find it at some large supermarket. But if you are seeking it, you will find it. It's there.
somehow it feels appropriate that those seeking a manager like Tony should have to work just a little harder to find him. What he does and how he does it, despite his protestations to the contrary, is unusual today. Not only is it unusual, but to Tony's point about why something might be rare, it's not necessarily something that most people are looking for. However, for those whose time preference matches Tony's and who are looking for a true steward for irreplaceable savings, hearing this kind of wisdom will seem like water in the desert. How do people find people like you? Because to your point, you're not on Twitter, you don't do interviews, you don't do media. People have found you, and you know other people that think similar to you and invest in a similar way to you, but I don't. And I talk to a lot of people in this business, and I spend time with great professionals that do a fantastic job. But you are different. You think differently, you act differently, you invest differently, and that requires you to have a different type of investor. We've talked about this alignment, this time preference. There are people, I guarantee, watching this, who have been trying to find someone that thinks the way you do and invests the way you do. You're very difficult to find. How do people do that? How do they seek you out? Because they wouldn't have the first clue where to start.
But eventually, when we list our shares on the stock exchange, they can go buy a few shares.
Well, actually, talk about that percent, because that seems at odds. The reasons for doing that, I understand, but it's worth talking about, because that seems at odds for you to list on the stock exchange. It would seem an odd thing to do.
Well, the listing on the stock exchange is a way of finding freedom in an unfree world, believe it or not. It allows anyone, anywhere in the world who is a shareholder to buy 5 shares or sell them without having to produce a serum sample and a copy of this and a copy of the other. Today we are more or less a rich man's club, but we can acquire more permanence to our capital by listing, and a listed company has certain freedoms that privately held companies don't have. One of the best ways to hide it from the world is not in the desert, but in the middle of New York City, perhaps, sometimes. And listing may give us that longer-term substance that is difficult to find. We haven't concluded yet that we're going to do that, but it's in the works. It's an option that we are considering.
So when you look at this at the industry from where you sit, and you are detached from it, you've created your own niche in that business and your own way of doing things. Do you pay attention to what goes on in other parts of the industry, or are you in other parts of the investment industry, or are you just laser focused on your little part in it and the rest of it really doesn't?
Well, I'm interested in the fertilizer business,
right?
The salmon farming business,
yeah.
Lots of other little areas. I have no interest in financial work. None. Zero.
But so this is the last thing I want to talk about, because people, I'm sure, think, well, how can you be an investor and pay no attention to the finance world?
I'm thinking of a friend I have in England who manages a very large public fund, and with a fairly large visible standing, that he will often do things because it's necessary, because of the position he is in, rather than because that's what he wants. He would readily admit, among others, that there's no value in reading the financial press. There really isn't. First of all, the news is not news. It is true, it's all fake, but it's always been fake. It's nothing new. A lot of what goes for news are poorly disguised promotions, or written by people who have no clue. I was once called by a reporter. I don't know how they found me, and they asked me if they could use a quote from me that the reasons for the increase in something was because of this and that, if they could quote me. And I said, you can quote me, yes, the price of this increased, but not because of the reasons you've suggested, but I'm happy to give you my view. He said, no, I just want to quote you that they went up because of these reasons. I said, you cannot quote me. He said, okay, thanks, and hang up the phone. I recently met a farmer in Greece who has, 25,000 orange trees. It's a wonderful business. And I was discussing with him the economic viability of adding value to his production instead of selling the apples directly into the market, because he has thousands of tons. And he says, I haven't thought about it because I'm so busy with the trees and their care that I have no time to think about some of these matters.
Right.
And I said, well, how does government policy of subsidies and other things impact you? He says, I don't know. I said, don't you have a local press that industry that follows? He said, I don't read that stuff. They don't know what they're saying.
Right.
People who are involved in a real economic endeavor don't have the time. I mean, of the people who have friends who are fund managers, none of them tweets. No one has time to do that. Besides that, what can you say in 40 characters, whatever it is? So I'm not suggesting there's no, Twitter is not a good thing, no means, but there's just no time to do these things. Just don't have the time. I think part of looking at the press constantly and seeing what other people do, because people's decisions are largely based on other people's opinions, other people's temperament, other people's worldview, and they seek to create a framework, an investment framework of their own based on ideas that come from others. And the way to find them is reading the press or watching CNBC or whatever people do in the English-speaking world. If you stand back and say, I'm really not interested, anyone else does, I inherited this small fortune and I want to deploy it in a manner that makes a great deal of sense. I'm going to sit down and figure out for myself what is the right thing to do. Then you are uninterested in what other people do because you don't know their motivation, right?
Yeah.
A year and a half ago, they asked me to speak in New York, I told you, in this forum. And they told me, he said, look, you have to say whatever you say, but then you give us 2 good investment ideas. People are used to this sort of thing and they want them.
Sure.
So I said to the organizer, I said, imagine you ask a doctor, can you give me the names of 2 good drugs? It's the same question.
Yeah.
First of all, an investment idea is worthless unless you understand whether it's suitable to someone, appropriate.
Yeah.
So the fact that you take a particular medicine and it's useful for you, you don't say, Tony, you need to take that too.
Try
this
this
is good
stuff.
for
Right.
me.
Yeah, right.
Well, maybe I don't need it.
Yeah. But that comes back to this point about a good investment idea has become a synonym for something that's price is going to go up. And the two are completely different.
Yeah, I don't have investment ideas.
Right.
You're right.
And that's the problem. That's the quick fix. Give me something that's going to, it's the instant gratification. This delayed gratification of investing in a business, taking, a participation in a business, in a family, in an intergenerational means of preserving capital and growing capital over time has been substituted for, tell me the name of something that's going to go up tomorrow. And that's, to me, that's a shame. And talking to you this last couple of days makes me realise what a real shame that is, because it does take us back to this casino mentality. You give me an idea that's going to go up tomorrow. If it doesn't go up tomorrow, you're an idiot or you were wrong. Whereas he may have, quite out of the blue, plucked out one of your companies that you've spent all these months researching and know the family, and to you it's a great long-term investment. Another guy gives the same stock as a tip. It goes down tomorrow, and I sell it because it didn't go up.
I'm completely uninterested in what anybody else does. In fact, I'm happy if they sell it because I can buy more.
Right. Tony, look, we've spent 2 days talking, you and I. It's been wonderful opportunity to get inside that brain of yours. That people watching this will never have had that opportunity, and they may never have it again if I've scared you off of doing anything like this. But I can't thank you enough for doing this, because I know it's the last thing you want to do. For being so generous with your insight, I can't thank you enough. So thank you for doing this with me. I really appreciate it.
I'm glad to talk to you. Enjoy.
The hours I spent talking with Tony seemed to be gone before they'd begun, and when the cameras finally stopped rolling, I found myself with almost 4 hours of footage, which I knew would be nothing short of heartbreaking to try and distill into what you've just watched. Despite his protestations that what he does is unexceptional, I find Tony to be one of the wisest investors it's ever been my pleasure to talk to, and a man who is both true to his principles and rigorous in their application. Tony looks at the world through a simple lens that harkens back to a different time, and he invests with a thoroughness and a discipline which speaks to me in what I found to be a truly profound way. To listen to Tony talk about how he invests in the people who run the companies in his portfolio, and how he seeks scarcity and endurance in a transitory, profit-obsessed world was a revelation, a strategy light years removed from that which many of today's managers pursue. As I left the fresh mountain air of Switzerland, I knew that the lessons I'd learned from my time with Tony would have the same kind of permanence in my mind as his various participations did in his portfolio, and that I'd been exposed to skills that I would try to incorporate into my own investment process for many years to come. I'd been to the mountaintop, and I certainly didn't mind.